Okay, so we're recording. There we go. All righty. So today we are going to talk about the Foreign Interests in Real Property Transfer Act. And let's just see here. It looks like people are still kind of joining. We have like almost 300 registered. So, all right. So the way this is going to work, I'm going to be doing the presentation. If you have questions, I have the chat up. And if you have you can either write me a chat message or you can raise your hand in the participants side. If you click participants, all the participants will show up. You'll be able to raise your hand. And then if I have questions, I may ask them and let you all answer. You can unmute yourself and answer. So as we go through this, feel free to ask questions. We're going to have a nice conversation. And we're going to talk about the Foreign Interest in Real Property Transfer Act. So let's just get started. Because I am an attorney, we're going to start with a disclaimer. Not directly legal advice. This is a presentation of information only. If you have any specific legal questions, we can discuss those separately. So let's talk about what FIRPTA is and how it works in practice for your typical residential real estate transaction. So the disposition of a U.S. real property interest by a foreign person is subject to FIRPTA, which is the Foreign Investment in Real Property Tax Act of 1980. And essentially this is a withholding. And we're going to talk in detail about the fact that it's a withholding and not a tax. And what FIRPTA does is it authorizes the federal government, the United States of America, to tax foreign persons on their dispositions of U.S. real property interests. So the most important thing is, what is a disposition? It's ironically, because this is the tax code and everything is difficult to understand in the tax code by design. A disposition means a disposition for any purpose under the Internal Revenue Code. So you got to look through the Internal Revenue Code and figure out what is a disposition for any purpose, which essentially for our purposes today means a sale, exchange, liquidation, redemption, gift, or transfer of the property. So any transfer of real property in the United States or the Virgin Islands is subject to FIRPTA. And I want to point this out here. Persons purchasing U.S. real property interests, persons purchasing, transferees from foreign persons, certain purchasers, agents, settlement officers are required to withhold 15% of the amount realized on the disposition. Note that it's the transferee, which is the buyer, that is responsible for the withholding. People often get this confused, and we're going to talk more about this as we go through the presentation, but the buyer is the one responsible for remitting the withholding to the IRS. I'm going to say that several times today because I want to drill that into you, that it is the buyer that is responsible for the withholding. Someone is saying your screen is showing you a cam. Can you all see the screen share? The slides?
Yes.
Okay. So FIRPTA is actually not a tax. We talk about it as a tax, and of course sellers view it as a tax, certainly as an inconvenience, but it is not directly a tax. It is a payment on account of the taxpayer, which is the seller, and it is a withholding. And the process to get the money back, if any is owed back from the IRS, is completed by filing a U.S. tax return. And just to sharpen that point a little further, as we go through this process, you're going to see the money is remitted by the buyer, the seller files a tax return, and then the seller gets whatever portion of the money back is not owed as taxes. So the next step is the withholding agent. who is the withholding agent, the person responsible for the remittance? In most cases, it's the transferee buyer that is the withholding agent. And if you are the buyer, it's your obligation to find out if the seller is a foreign person. If the seller is a foreign person and the buyer doesn't do the withholding, then the buyer could be responsible for any tax due on the disposition, of course, which is the sale, the gain on sale. So what is a U.S. real property interest? A U.S. real property's interest is any interest other than as a creditor in real property. So it can include mineral rights, a well, natural deposits. Notice though what I underlined, other than as a creditor. So lenders and their interests are not subject to FIRPTA. So if when money is paid off for a loan, for example, it's specifically exempt. So what is the rate of withholding under FIRPTA? You heard me say at the beginning, it's 15%. The transferee, that's the buyer, must deduct and withhold tax in the total amount realized by the foreign person on the disposition at a rate of 15%. Now, we'll talk a little more about the exemptions, but if the amount realized, if I say amount realized, that's the purchase price, not the net amount on the HUD, but the gross amount, the top line number. If the amount realized exceeds $300,000, does not exceed $1 million, and the property will be used by the buyer as their residence, and we're going to talk about what that means, then the withholding can be reduced to 10%. So there is an opportunity for your sellers who know they're going to be subject to the FIRPTA withholding for properties under $1 million, where buyers can come in and use the property as a residence as opposed to an investment rental type property, and they would the seller would then be eligible to reduce the withholding amount. Okay, so what is the amount realized? It's the cash paid. It's the fair market value of other property transferred and the amount of assumed liabilities. So it's the purchase price. I said this before, I'll say it again. It's the top line number on your contract. It's the top line number on your closing statement. It is not the net amount that the HUD shows the seller receiving. It is not the net amount that the seller believes will be their gain on sale. This FIRPTA process happens at the time of closing. The seller then has to go to their CPA and determine what their gain on sale is. And there's a specific formula for that where you look at the seller's purchase price, the seller's cost of purchasing, the seller's improvements, and the seller's cost of selling, and you figure out what the gain is by looking at the basis versus the sale price. And that's a little beyond today's presentation. That goes into gain on sale. But just know basically that you look at the cost of the property to the seller minus what their sale price is, and that's going to be the approximate gain. But that is not the amount realized for FIRPTA. It's the sale price. Okay, so let's talk a little more about rates of withholding when you have multiple people on the property. If the property transferred was owned jointly by U.S. and foreign persons, but the amount realized is allocated between the transferors, and you look at the capital contribution of each transferor. So this gets into a little bit of partnership tax law, but you look at who brought what to the transaction originally, and remember that's cash plus debt. So for example, if the foreign person brought cash because they were trying to bring cash into the United States and they had a U.S. partner who used debt on the purchase, then you would add up the U.S. person's cash and debt, and you would add up the foreigner's cash, and you would say the total amount realized, here's the percentages of each, and then you figure out the withholding based on the foreign seller's percentage. Okay, so domestic corporations, that includes LLCs, must withhold tax on the fair market value of the property distributed. So it's essentially you look through the company and you look at the foreign persons. So who are U.S. persons where no withholding would be required? And actually, I'm going to say this a different way. Who is the U.S. persons who have an exemption to FIRPTA? Because when you look at FIRPTA, the statute actually says that it applies to every single disposition of real estate in the United States unless there is an exemption. And of course, we'll talk about exemptions in a minute, but if you're a US citizen, there's no withholding. If you have a green card, there's no withholding. If you meet the substantial test, which means that you are in the United States for enough time over the last 3 years that you meet the substantial presence test, then you may not have to do withholding. Paul, you asked, is FIRPTA applicable to vacant land? It is applicable to vacant land, to any disposition of real property. So domestic corporations don't require withholding. Disregarded entities where the owners are one of these 3 people don't meet it. And then any foreign entity electing domestic tax treatment, which means they're paying taxes in the United States already. Okay, there are 13 exceptions to FIRPTA. Mercifully, today we're only going to discuss a few of them, the ones that have come up most importantly to residential real estate. But just know that if you get into the commercial side, there are a lot of other things that need to be reviewed, which we can certainly do on a specific transaction. Okay, so we talked about this briefly, but let's talk about it in greater detail. The residential use exception. If the transferee, the buyer, acquires the property for use as a residence and the amount realized is not more than $300,000, and the transferee or a member of the transferee's family has definite plans to reside at the property for at least 50% of the number of days the property is used by any person during each of the first 2 12-month periods following the date of transfer, then you have an exception. And so let me dig into this with a couple of examples. This is Southwest Florida, a lot of seasonal folks, a lot of seasonal rentals. People want to come down, they want to use their property a few times a year, and then they want to rent it out in the other times of the year. You can do that and still meet this exemption. What has to happen is the buyer has to be the person who uses the property the most in each of the first 2 years. Birgit and Tammy, I'll get to your questions in a moment. So let me just expand on this a little. Say you are going to buy this property and you want to come down for the best months, February, March, and April, but you still want to rent the property a few times a year to get some income. If you come down here for 3 months and use your property as your residence, you can then still rent the property for 3 months, and you would not be subject to a FIRPTA withholding because you have used it for 3 months, somebody else has used it for 3 months, so the total time the property was in use was 6 months, and you, the buyer, used it for 50% of that time. I hope that makes sense. It's not the whole year, it's only the time used. So if the buyer used the property for 1 day a year, they can rent for 1 day. If they use it for 6 months, they can rent for 6 months. Where you get into trouble is where people want to rent for 3, 4, 5 months, 6 months out of the year, and they're only here for 3 months. Then you are not the primary user of the property, and it's subject to FIRPTA. Okay, Birgit, you asked, what if the property is in a trust? You look through to the beneficiaries of the trust, the ultimate taxpayers, and you see who is responsible, and then if they're a foreign person, then FIRPTA applies and there's a withholding. Tammy, you asked, can you tell how to present the residential use affidavit to the buyer? So, Tammy, the residential use affidavit presenting to the buyer, similar to what I just said, you've got to go to your buyer. You've got to say, buyer, what is your plans for this property? They say, oh, this is going to be my primary residence. No problem. Present the affidavit. It should not be an issue at all. If they say this is going to be a seasonal rental, but I'm going to use the property, then you got to get into some details. And it's a present plans to use the property in each of the next 2 12-month periods. So you got to ask them, how do you, what is your plans each of the next 2 12 months? Are you going to live there? Are you going to rent it? And you got to get into some details, and they got to come up with some definite plans. And remember, it's the buyer that has to do the withholding and the remittance, but it's the seller who has to pay the tax. So the buyer should really not taking any risk by signing the affidavit unless they're really certain. Now, if it's your listing and the seller won't do a closing or won't do a contract without the FIRPTA affidavit, then you got to negotiate. Leslie, you ask how and who monitor the time frame. If somebody were to report it, then there would be a problem. I don't believe the IRS has an active monitoring for this. I have not seen or heard of that. Wayne, what are you saying? If you're Wayne, you are exactly correct, Wayne. That's right. February only has 28 days. And so when I say 3 months and 3 months, it's daily. So you are exactly correct. If February is one of the days you use it, then you would have to rent for less than 3 months. Good catch on that, Wayne. Okay. Okay. So the biggest exception that people are used to or may not even know about from FIRPTA is when you come to closing and you're a seller, one of the documents that you sign as a US citizen is your non-foreign certification paper. And it's a notarized certification that says you're a US citizen, and your social security and your new address are on the form. And when you provide that certification, that is actually a FIRPTA exemption. If the seller, for whatever reason, refused to sign that paper and provide it to the buyer, then the buyer would be obligated to withhold 15%, even if you were a U.S. citizen. Let's see here. People are questioning. Oh, it is immediate family, Jerry. Yeah, cousins and aunts and uncles don't count. And the fact that it's rented doesn't count either. So if you have a bunch of family members who are going to come use your new beautiful Naples condo, and you're not going to be the primary user of the condo in the first 2 years, FIRPTA still applies. They don't ask, was it a rented or investment property? It's a use test. Okay. So the next exemption, you receive a withholding certificate from the Internal Revenue Service that excuses the withholding. We're going to talk again a little bit more about withholding certificates. It's the 8288B form that a CPA has to fill out. It's fairly complicated, but it says that if it basically reduces the withholding from 15% to the actual amount of the tax due, and then that amount is remitted to the IRS after closing. Then it's a reduction in the amount owed. It's not a complete exemption from the 15% like the non-foreign certification or the residential use. So the other exemption is if the amount the transfer realized on the transfer of U.S. real property interest is 0. This is for short sales. Again, don't look at your seller's gain on sale, even if it's a loss. Look at the HUD. If the seller's getting 0 on the HUD, then this applies. And then 1031 exchange proceeds are also exempt. Okay. So let's talk for a minute about withholding certificates. This is, I mentioned this a few months ago. But if the seller applies for a withholding certificate with their CPA, you can adjust the amount of the withholding down to the actual tax. This is a long process. The seller has to get the U.S. taxpayer identification number. And I wrote in here that requests take about 90 days. With COVID, it's taking 6 months or more. And it is a very difficult process to get through with the IRS at this point. Okay, hold on, let's see here. We have some questions. Maggie, what if the listing does not say subject to FIRPTA? Is it on the title company to catch if it is actually a foreign investment? Well, good listing agents will say that it is subject to FIRPTA in the confidential notes. But if they don't, it is on the buyer to make sure that the seller is a U.S. person or has a proper exemption or does the withholding. And typically it's the title company, because we ask for the seller's social security numbers. On our seller information form, we say, are you a U.S. citizen? Do you have a taxpayer ID number, and all of those things. And then we would advise the buyer, hello, seller's not a U.S. citizen, FIRPTA applies, and then we can prepare the paperwork for that if the seller doesn't have a CPA or an exemption. Okay. Gerald asked, if the buyer exempt from the required withholding if the property sold is under 300,000. Again, Gerald, the buyer is exempt if the buyer is going to be using the property as a residence. That is, they're going to be the person who uses the property the most in the next 2 years. So that is how that applies. It's not an automatic. There's two parts to the test. There's under 300,000 and residential use. There's also under $1 million, but more than 300,000 and residential use to reduce the withholding. So you have both. So a withholding certificate may be issued due to a determination that the withholding is appropriate because the amount that must be withheld would be more than the transferor, that's the seller's maximum tax liability. That's when they reduce it to the actual tax due, or the reduced amount will not jeopardize the collection of the tax. I've actually never seen this exemption used. It's typically they reduce it to the actual amount of tax due. Okay, so let's get into the forms, and I'm going to try and do this through Zoom. So there are two forms that are generally required for reporting and paying the tax. There's the 8288 and the 8288A, and I'm going to try and show you those forms right now. Can everybody see the forms? Shake your heads if you can see them. I see some people shaking their heads. Okay, so this is the 8288. It has two parts. Let me zoom out a little bit so you can see it. Part one is for the buyer. Part two is for an entity. So you really, typically in our residential transactions here in Naples, we fill out part one. And you can just see it's the buyer, their address, the legal description, their taxpayer ID number, and then down here, the date of the transfer, and the amount subject to withholding, and then this is where we type in the actual amount withheld. And then note here, the buyer signs this form, not the seller, and then I put my information here. And then this form goes along with this form. This is the 8288 A, which has the withholding agent's name, again, the buyer, person subject to withholding is the seller, description of the property, and then, where is it? Here it is. So the 8288 requires the seller's tax ID number. If the seller does not have a tax ID number, the seller's got to get one. They've got to go to an acceptance agent. They've got to go to the IRS's taxpayer assistance office, and they've got to get a foreign persons have to get U.S. taxpayer identification numbers. Otherwise, they don't get the money back. Okay. So under the law, the transferee is the withholding agent, is responsible for the withholding and remitting the proper amount to the IRS. Note here, I put an alert where the foreign transferor tries to get them to claim residency merely to lower the withholding amount. Remember, it's on the buyer. So make sure that your buyers understand their obligations, or call me and I'll make sure they understand them. Paul, you're asking if I have a U.S. company and a taxpayer ID number, but the main shareholders are foreign. If the corporation pays U.S. taxes, then there would not be a withholding on that, Paul. Okay. So these forms are used by corporations, partnerships, estates, and trusts, and they are that must do the withholding. And you have to, like I said, you have to include the taxpayer identification number of everybody on the forms. You can't get away with that. If you don't do that, then the seller won't get their money back because the IRS won't know how to apply it. So the 8288, you have till the 20th day after the date of the transfer. I'm going to mention this. The contract that you sign, the NABOR contract, is different than the IRS regulations in that it actually has us remitting the paperwork and the amount of the withholding within 10 days. I've had some disputes with a couple of lawyers on this where they say, no, we have 20 days, but the contract is more restrictive. So in our office, we remit within 10 days. And of course, if there is a delay, there's interest and penalties. So let's not delay. We need to get these forms prepared prior to closing, get them signed at closing, and get them remitted within the 10 days required by the contract. Okay, Jerry, you asked, what happens if the buyer is going to live there full time for the 2 years and he gets sick or dies? Well, it's a present intent. If he gets sick and goes into the hospital, if there's a life-changing event, a job change, the IRS is not going to penalize you for that. Oops, apologize for that. Rami, you're saying foreign nationals do qualify to participate in the 1031 exchange and are exempt from FIRPTA. Well, the exchange proceeds would go to the QI, the qualified intermediary in a 1031, Ramia. So the money is not going to the seller and then it's going into the new property. So it's not like the seller gets the funds in a 1031 exchange. That's the reason there's an exemption. Okay. So again, with the 8288A, it's for each person, so you may have multiple 8288As that have to be filled out. Of course, in our office, we just prepare those for whoever needs them. We charge $250 through my firm to do the FIRPTA paperwork. Note here, the transferor must attach to its U.S. income tax return substantial evidence of the withholding. So usually you would attach the 8288 and the 8288A to your tax return to get your money back. And then we talked about this, the 8288B can allow for the reduced rate of withholding, but you have to go through your CPA to do the disposition analysis, and then you can get a reduced withholding. Okay. So this slide I put in here, this is more of a warning. If you don't get your W-7, which is your taxpayer identification number application done and submitted prior to or with your 8288 forms, it's not simple to get your money back because you have to get all of that paperwork submitted. And if you don't provide us with your foreign taxpayer identification, your U.S. taxpayer identification number, if you're a foreign seller, we write applied for in the 8288A form, and then we give you a copy of it, and you have to go to the IRS and deal with them separately. Okay, so Cindy, you're asking TIN is the same as SSN. No, it's a social security number is used the same as a taxpayer identification number. But I wouldn't say they're the same. There are different forms and different processes and actually different agencies that issue them. The IRS issues taxpayer identification numbers. The Social Security Administration issues Social Security numbers. All right, so that's pretty much FIRPTA in 30 minutes. It is a pain in the butt. It's a difficult process, but the IRS wants to get paid. So now I'm going to open it up to questions. If anyone, you want to unmute yourself and ask questions or type it into the chat, go ahead. And I'll take questions at this time. Paul?
Yeah, I have a listing in Fiddlers. It's owned by a person in the UK.
Okay.
It's listed right now. He paid $511,000 for it, and it's listed at $299. He'll probably get $280. He's going to take a big loss. So that is no reason for any kind of exception. He still has to have someone live there 50%, the buyer.
Yes, losing money on the property is not an exemption. It's only if he was getting zero. So if it was like, again, the short sale. So if it's a short sale situation, then you can get out of it. Let's see here.
Okay, thank you.
Yes, I'm getting a bunch of questions. Where to find recording later? Juan, I don't understand your question. If you want to expand on that, go ahead. And then, yes, we help other agents in other counties in Florida. We are all over the state of Florida. The furthest away I've done is in Bay County, which I believe is in the Panhandle. But we handle all over the state. Cindy, I'm a little confused as to non-foreign buyer withholding just needs a TIN, just to clarify, please. So, Cindy, I don't understand your question exactly, but a non-foreign buyer would have a U.S. Social Security number, and that would be their taxpayer ID number that would go on the forms. Gerald, what if the buyer sells the property in 1 year? Again, it's a present intent test. If the buyer sells in 1 year, then the buyer sells and they're fine. The money that wasn't remitted, hopefully the seller properly filled out their tax returns and paid what was due. Let's see here. Sam, thank you for yes, I have recorded this. I'll post it to my YouTube channel, and then you can go back and review it later if you would like to, Sam. Maggie, I have not been a buyer agent on FIRPTA yet, so basically the buyer gets the money at closing and then remits to the IRS with the forms, and then they are done. Yeah, basically that's correct, Maggie. If the buyer is buying from a foreign person, then they fill out the 8288, the 8288A, and 15% is remitted to the IRS by the title company with those forms, and then it's all on the seller to get it back. Tammy, what obligations would you say we have as selling agents when we are selling to a foreign buyer in terms of disclosure? You know, Tammy, that's a great question. What obligations do you have to foreign buyers when they go and they're eventually going to sell and they're going to get dinged with this 15%? It's in the contract that they sign about FIRPTA, but it's not really a disclosure. It's more of a contractual obligation to complete the forms. I would say, you know, something along the lines of, you know, please be advised, and you can do this in an email, that upon your purchase or upon the sale of this property, should you ever choose to sell, the FIRPTA law will apply, and we'll deal with it at that time. I'm not really sure what other obligations you would have. I mean, they are deemed to have knowledge of the law, so I don't know about that. I have to think about that. Vivian, please reconfirm a foreign seller with U.S. resident alien status green card is not subject to FIRPTA. That's correct. If you present a green card to me at closing, I would not do a FIRPTA withholding. You would have a U.S. taxpayer identification number, and we would report on the 1099, and then the green card holder would pay their regular taxes. Birgit, just be a good agent to your buyer and educate them. Yes, that's exactly correct. Now that you've taken this presentation, you can say to your foreign buyers, listen, there's this crazy law in the United States. There's a withholding of 15% when you go to sell, unless there's an exception. There are 13 exceptions. If we can't qualify for one, you file a U.S. tax return, and you'll only ultimately pay for the money that you made on the sale. Let's see here, Fausto. So if a buyer buys a property for $100,000 from a foreign buyer, I think you mean from a foreign seller, buyer transfers their $100,000, and then they must reserve $10K in case seller doesn't pay taxes. So Fausto, if it's a $100,000 property and the seller is foreign, then the buyer has to withhold $15,000 or 15%, unless the buyer, again, is going to be able to have the property for a residence. If the property is for a residence, then on a $100,000 transaction, the withholding would be 0 because you're under $300,000. The only time you get into the 10% is when the property is between $1,000,000 and $300,000, and there's a residential use. Then that's just a reduced withholding. Okay, other questions? You can unmute yourself or type it into the chat. I'm not seeing anyone. Oh, hold on, Cece. If there is an exemption from withholding, is the foreign seller still required to report the gain and pay tax on it? Yes, yes. Thank you to the IRS, the most powerful government agency. You always have to pay your taxes. It's just an exemption from withholding. It's not even a tax that they're imposing. It's just a withholding. Taxes are imposed by another part of the tax code, and the seller will be subject to it. Mary, so if the property sells for less than $300,000, does this not apply? Mary, don't mess this up. It's a two-part test. Under $300,000 and residential use. So if the property is under $300,000, but the seller but the buyer does not qualify for the residential use test, there is still a withholding. That's very important that you understand this when you're talking to your clients, your customers. It's a two-part test. It's a residential use and an amount for the sale. Lynn, you're asking, are most foreign sellers aware of this withholding? No, they are not. I very often get upset sellers when they see that 10% or that 15% on their closing statement, and I get a question like, what the hell is this? Where's my money? So it is not well known, but it is absolutely imperative that every realtor understand this, because it affects every single transaction. There must be an exemption. Ryan is asking, how long is the 15% withheld for? How quickly can the seller get his money back? Ryan, the seller gets their money back when they file their tax return in the United States. So the process is the buyer sends the money to the IRS, the seller files a tax return with the IRS, and then as a part of that tax return, they show the tax withheld already, and then if there's a negative number, they get money back. And the issue is, if you sell the property in, say, April or May of 2020, well, you can't even apply to get your money back from the IRS until the 2021 tax forms come out in January or February. And then, of course, typically you file your taxes by April 15th of the following year. So it can be very punitive on sellers to have to wait upwards of a year or more to get their money back because they've got to apply, they've got to fill out a US tax return. Okay. Sharon, how does the buyer hold the funds in an escrow account? Also, buyer does not have to sign the affidavit even if they're using as a primary residence. Sharon, the money is held by the IRS. We remit the money with the 8288 and the 8288 forms to the IRS within 10 days of closing. And then the seller has to go and fill out that tax return like I was just talking about and apply to get the money back. So it's not held like an escrow at my title company or something like that. It's held by the IRS. Okay. You're right. Also, Sharon, the buyer does not have to sign the affidavit. If they don't want to sign a residential use affidavit, then there's a withholding and the seller has to do it. And the NABOR contract says it's on the seller to go file their tax return. It's on the buyer to do the withholding. So there's contractual and statutory rights. Okay, Devin, I'm a listing agent for a foreign seller and the home is currently pending. It is under 300,000 and the buyer will be using the property as a rental for the first 2 years. Their buyer agent is a new agent. I'm certain not very familiar with FIRPTA. Well, they should be on this call. Would you advise me to call the buyer's title company and make sure they're qualified to assist this buyer in filling out the necessary forms? Absolutely. And really, title companies should not be doing tax forms. You need to get an attorney or a CPA to do the tax forms for the buyer. So I would definitely call the title company, make sure they know that it's a foreign seller and that FIRPTA is going to be an issue. Okay, Leslie, you're asking about a situation where foreign parents owned and want to transfer via deed to a daughter who was a US citizen. I did not take the listing. Well, if they were transferring it for $0, again, no money realized, then there would be an exemption from FIRPTA and you wouldn't have to do the withholding. But in this case, it looks like it wouldn't be something that a realtor would be involved in anyways, because it's just a transfer from the parents to the daughter. If there was money involved, then if, say, the parents were selling for fair market value and this happened to be the daughter who was buying, FIRPTA would apply and you would do the withholding. Oh, Leslie, I see you said a legal weight, the gift to the daughter. Well, you know, there are gift tax implications. I'm not a CPA, so I'm not going to get into gift tax, but there are gift tax implications from that foreign seller to the US daughter. So yes, you're right. It is probably someone trying to get around FIRPTA and it probably won't work. Yes, Devin, I charge $250 for the FIRPTA forms. And I want to be very clear. I do 8288 forms, 8288 forms for the withholding. If you are going to do an 8288B and apply for the exemption, then you need a CPA because there's a lot of math involved in that. And you need an acceptance agent, not just a regular CPA, but a CPA who is an acceptance agent, or you have to go to a taxpayer, IRS taxpayer center and get those taxpayer identification numbers for your foreign seller. Okay, Tammy, what do you have here? Oh, okay, you want to cancel that. All right, other questions that we have? Fausto, so the withholding comes from the purchase money. It's not something over and above the purchase price the buyer could be on the hook for. That's exactly right, Fausto, except if the buyer, say the property is $1 million and there's no exemptions. It's a foreign seller, buyers buying investment property, and the buyer sends the $1 million to the title company, and then the title company does the disbursement, and we'll pretend there's no closing costs, and the seller gets their $1 million and they're in China and they disappear. Then when the IRS examines the transaction, if they examine the transaction, then the buyer would be on the hook for $150,000 above the $1 million, because remember, it is the buyer's responsibility to know that their seller is US or foreign and get the proper paperwork. So in that situation, you really could have it where the buyer paid for the purchase of the property and then had to send the 15% to the IRS if there was a mistake. So be very careful there. Okay. Lynn, so the realty for the seller is that they cannot access all their proceeds from one sale to purchase another property. Well, Lynn, if the 1031 is involved, then you can do that. But if it's not an investment property transaction, then yeah, the seller would lose 15% of the purchase price to the IRS until they got it back. So that would make it difficult to do, like if they were trading up, for example. Maggie, do they actually only pay 90%? No. You pay 100% of the purchase price for the property, but 15% goes to the IRS and then comes back to the seller after they file their tax return. So it's not like you pay less for the property and the IRS gets a piece. Valentina, is the $250 charge to the buyer or seller to do the tax forms? Under the NABOR contract, the seller pays. But it is the buyer that we're doing the forms for. Susan, your question, when does the seller file to get a TIN after contract, or can they do it before listing? It used to be they could do it anytime. Now they've got to have a contract to do it. So the acceptance agent has to have all the details of the transaction as part of the ITIN process. Cindy, what about foreign seller and foreign buyer? You got to expand on that a little bit. I think you're asking me if the buyer is also foreign. That doesn't matter. The buyer will pay or will deal with FIRPTA when they sell. And Leslie, yes, it can, depending on the forms and the nature of the seller, it could be a long time before the seller gets their money back, even if they file a tax return, because it's got to be analyzed. It's not, my understanding of the IRS application operation is, this FIRPTA stuff is done by a separate department than the people who do regular tax returns. So it can take some time, but typically they try to get them done within 90 days. But with COVID, it's been over 6 months. Victoria, if I have a buyer, is it listed in LIPA that the owners are foreign? No, it's not. And again, the way FIRPTA is written, it applies to every single transaction. So it's on the buyer to ask the seller, are you a foreigner? Are you a US citizen? Are you a green card holder? And then if the seller signs the non-foreign certification at closing, then there's no withholding. But if for whatever reason they don't do that, then there's a withholding. So it's not listed as, there's no registry where I can go find all the foreigners that own US property interests. It's just you have to ask as part of the process. Linda, that's exactly what I said. If a foreign seller would like to be prepared for the sale of his property, he's got to have a contract before he applies for his TIN number. That's a new rule last few years. The guy that I use as an acceptance agent says he's got to have a contract before he can apply for the ITIN. Okay, what else do we have here? You can unmute yourselves and ask the questions in person if you want. You don't have to use the chat. Anything else? Other questions? Going once.
Hey, Sam, can you hear me?
Hey, Devin, yes.
Good, man. Hey, thank you, one, for doing this class. This is extremely helpful, and
Sure.
I appreciate it. So in my previous little question and scenario, I am assisting a foreign sellers, Canadian citizens, in a transaction in Tarpon Bay, a little condo. It's like 240 sale, set to close here in a couple months still. Buyers are going to be using this as a rental property primarily for a couple of years, and then use to like retire and then live in it.
Sure.
That being said, they're not going to sign this residential use. I don't blame them. But this buyer's agent that I'm working with is a very new agent. I've been kind of guiding her through this. I'm still, a little new with this FIRPTA stuff as well. They're using Cypress Title and Escrow. I'm not familiar with them. I don't know if they have an attorney on with them.
They don't, but Lauren's great, but you need an attorney to do the forms. She should be doing the ITIN forms.
My seller's using Bryant Title. I know he's a little bit familiar with FIRPTA here. Is it
Yeah,
possible
Brad's good.
can he file these paperworks on the buyer's behalf? Obviously, the seller is going to be paying for it anyways. Is that something that can be done?
That's something that you'll work out between Lauren and Brad. They got to figure that out. Who's going to handle the paperwork? Typically, the buyer has an attorney or an accountant that does the paperwork, just because it is the practice of law or accounting to do the paperwork. Typically, the title company doesn't do the 8288 and the 8288, and certainly not the 8288B forms. So I would go to Brad and say, listen, can you get these forms done? If the seller doesn't have a taxpayer ID number, you've got to go to an acceptance agent. And the guy in town that does all of them that I know of is Nace Cohen, if you know him. And there are a couple of others around Southwest Florida, but the seller's got to get that taxpayer ID number, and then I would just talk to Brad at Bryant Title about that.
Would it all? I mean, if it's not too late, and I can just convince the buyer's agent to have her buyers close with you. I mean, like I said, this closing
Sure.
until November 2nd. So I mean, she's been taking every bit of my advice from here on. So I think that if I explain to her, hey, there's some, you know, things that to be aware of with this FIRPTA that your buyers need to be, you know, aware of, and I hear someone who's very qualified to handle that for them for a couple $100 and, you know, have some
You
legal
certainly can do the forms, and Lauren can do the closing, or we can do the whole thing, whatever they want to do.
All right. Well, I appreciate everything. Thank you. I don't want to take up anyone else's time.
Sure.
Thank you so much.
Let's see, we have some more questions that have come in through the chat. Jim, I have a seller, Canadian, selling 3 lots for her. 2 under contract with builders. Seller has these under an LLC. The LLC is now defunct. How does that affect the transaction? Well, you have a lot of problems there, Jim. You've got to get your LLCs back into good standing prior to closing. And that can take 30 to 40 days because the Secretary of State is running way behind. And then foreign seller, FIRPTA applies, 15%'s got to be withheld. So that's the way that's going to fall. Pearl, what is the statute of limitations with the IRS? I do not believe there is one. I do not know, because my understanding of this, and again, I'm not a CPA, not a tax lawyer, but my understanding is that the statute of limitations doesn't even start until the tax return by the seller is filed. So I am not certain, though, if there's any specific statute of limitations. Lynn, let's do this because I'm recording and I've got to do this. Just give me a shout afterwards. Just give me a call. I'm gonna give you all my cell phone number. If I had a way to put this on the screen, I would do it. It's 239-784-5556. You can call me anytime. Put this in the chat. And we can go over what other questions you have. Okay. Any other questions? I have this scheduled for 7 more minutes, so I'm happy to take them. Eugenia, it looks like you're talking, but I can't hear you. All right, everyone, if there's no more questions, thank you very much for coming in today. I appreciate all of your time. Good luck out there. Stay safe with COVID. And I am available 24/7, 365, 7 days a week. Whatever you need me, just give me a call or an email. Thank you all very much for your time today. I'll talk to you soon.